Gold has outperformed stocks, so you just happen to miss out because nobody hears about that.
And the other problem with gold is there's just a lot of ways to get gold and a lot of bad ways to get gold. What's going on, everybody? Welcome back to the Money School Podcast. I'm your host, Chris Naugle, and today we're going to talk about something all of you know, gold. We're going to talk about gold. We're going to talk about what's going on. Why is gold so high? What is going to happen in the future? This is all going to be unpacked in this episode of the Money School Podcast. My guest is a gold expert, not quite gold member expert. You know, I love gold. That's it. So we're going to really dive deep into this topic. But Michael Arries, you've been doing this for 25 years. And actually, folks, give a big round of applause. You know, I know we can't hear it, but I'll do it for you. To Michael, you know, for literally sticking to this gold and precious metals thing for 25 years. I can't wait to dive into this episode. Michael, let's hear just a little bit about yourself. I mean, you've been doing this 25 years, but what did you do prior to that?
Well, and so I would say, thank you, Chris, for having me on the show. Really great to be here at Money School. And I've been investing personally in gold for 25 years. Professionally, I've been advising folks for 14 years. So, you know, I look young for my age, but I'm not that good. So really going back to high school, I've been buying it for myself, kind of just got into alternative assets, alternative economics, kind of alternative news too, really just kind of seeing what's really going on with the world, not doing anything mainstream. The company I work for, McIlvaney, I've been with them 14 years, but even going back to growing up, grew up in Colorado around where they were at and was familiar with them. My parents got their newsletter, went to some of their conferences. So we were thinking about gold and silver for a long time, even before Y2K, and started doing it from that point. So, you know, kind of, you know, early on in this bull market that's been going on the last 25 years, even kind of preceding that. So just having something real and tangible, something barterable. And ultimately, it's been great. I mean, you look at that time frame for owning precious metals, and it's outperformed the S&P. And you tell the average person that, they're like, no, you're crazy. Stop lying to me. And it's like, no, actually, you just are not paying attention. No one's ever told you. But yeah, gold has outperformed stocks. So you just happen to miss out because nobody hears about that.
Yeah, it's not exactly a sexy asset class. I mean, it's kind of known as like a storage of wealth, right? It's the defensive position you take when you think everything else is going to fall apart, including the dollar. So it's never really had that sexy appeal. And the other problem with gold is there's just a lot of ways to get gold and a lot of bad ways to get gold. I mean, I remember when I was a financial advisor, you know, there was gold fund after gold fund after gold fund, and most of them weren't worth a crap. So if you don't go the fund or ETF route, you go the physical gold, which I know is your specialty, where you actually buy it, then it comes down to storage. I mean, you literally could fill your safe, fill your basement, fill your bedrooms with gold. And how do you move this stuff? How do you get it around? And if you store it, then they charge you a fee for it. So there's a lot of challenges that come along with gold from an investment standpoint. But I love that you brought up that gold has beat the S&P 500. Now, folks, if you haven't looked recently, I just pulled it up before this. Gold is sitting at 29.13 right now. Like, let that sink in. Just go back a year, 2 years ago and look at where gold was. It's at 29.13, up 11.98. Like, it's on a tear right now, and we're going to uncover why and what's going on since the Trump administration took over and why gold is going through the roof. So I think these are some of the most important things. But before we get there, let's just talk a little bit about your background's pretty interesting. I mean, you studied economics and politics for 2 decades. Love that. I'm a huge economics guy. Politics, I've been following it, I don't know, since the last Trump administration, you know, the first round at it, you know, that's when I guess I started really following politics. And obviously it's very difficult to get away from it today. But one of the other things I like is magna cum laude at Fort Lewis College, bachelor's degree in accounting and computer science. Sounds pretty boring, but that's some pretty important stuff. Talk a little bit about that.
Well, I mean, I was always a good student growing up. I always got straight A's. So I'm just kind of like, yeah, that's what I did. So I'm glad I, graduated well with that. With accounting and computer science, like I've always been good with numbers and analytical stuff. So that's been a big part of that. And just the language of accounting kind of goes into just understanding finance and life and how we do everything. And it's a lot of stuff I think we probably should teach more people in high school and whatnot, just how to understand money flows and how to account for stuff in business and all of that. So, but then it mostly, worked in sales at a medical device company, and then was able to be an advisor here at McIlvaney because that was just something I was passionate about. Accounting wasn't passionate about, and couldn't get into that as a career, but teaching people, helping people understand, going over the strategy and advice we have. We're kind of different than other precious metals companies. It's not about selling you a fancy product. It's about helping you understand how best to do it, how to protect your wealth, what amount to do, what mix of gold and silver, all of that. So really helping folks, going over strategy, numbers, explaining economics, that ended up being more something I was passionate about than just, accounting, being in a back room doing someone's taxes. Don't want to do that.
Oh my gosh. If you've ever, there's another gentleman who wasn't passionate about accounting that was an accountant, Mr. Phil Knight, the owner of Nike. If you read his book, Shoe Dog, he talks all about how unpassionate he was about accounting, but how that served him really well in his role and his journey with Nike. It's a great book if you haven't read it, folks. But let's just dive right in. So first question I have for you is, in a portfolio, what do you suggest people do in the form of precious metals? So if 100% is a portfolio, how much should they allocate to physical metals?
Well, if you compare what I'm going to say to a traditional financial advisor, or maybe what you've done at one point, you're going to think I'm a crazy quack conspiracy theorist. So just be ready for that. Okay.
Maybe.
So I think gold is real money. And it's a store of value. So as we print our dollar out of thin air, we lose purchasing power to inflation. So we should have something, assuming you use the dollar, which is everybody, we should have something in our savings that fights that inflation. So, traditionally you might hear 3 to 5% having gold. I'm like, that's not nearly enough. If I'm out in the woods and I need to survive, I don't want a paper sack lunch. I want a survival kit and that can help me, purify water, make fire until I get rescued. So I'm thinking 10 to 20% at a bare minimum. So that's the kind of thing where, you talk to someone, their financial advisor going to say, don't talk to that guy. That's crazy. Gold doesn't do anything for you. It would never help you. And for me, I'm like, well, no, it's gone up 10 times in price in the last 20 years. It is never going to go away or go to zero. It's tangible. You can hold it. It's not a number on a computer screen. So as long as our Federal Reserve is printing dollars out of thin air, I want a fairly decent foundation in gold and silver, because that's the money, the real form of wealth protection, of wealth storage that's not going to lose to inflation. And you compare it to real estate, it's a tangible asset, but you've got benefits where it's portable and it's liquid. Why I don't want too small an exposure to gold and silver. I want a pretty decent insurance policy. So, even up to 20%, I want that in gold and silver, because that's like last resort. That's never going to disappear. It's been money for 5,000 years.
Yeah, no, I'm right there with you. 10 to 15%. Ray Dalio talks about that. Jim Rickards, I subscribe to all his white papers, his newsletters, and, he lives and breathes gold and talks about it quite often as to the same percentage you were talking. So, when we get into gold, and I want to talk, definitely focus mostly on why right now gold is a good investment, what you see in the future with, the current economic landscape that we're at. I mean, we're at a very unique time in history. I've been pushing the warning bell for a long time, but not everybody listens. So, before we get into that though, like one of the challenges that I find with gold is the storage of the gold. It's all those things you said, it's tangible, you can trade it, you can sell it. But one of the problems is once you buy the gold, finding somebody to buy the gold back at market price, I have found that that's pretty difficult. Now, maybe that's just because I don't know the sources, but I've had gold and silver and I've wanted to sell it, and I always get lowballed. So how do you avoid getting screwed on the sale? The buy is the easy part, but how do you avoid getting screwed on the sale?
Yeah, and we can talk about even on the buy, making sure.
You can get screwed on both.
And,
so why don't we hit both of those? How would somebody go about if they wanted to build a 10 to 15% position in their portfolio of gold, precious metals? But let's focus on gold today. I mean, silver's still very viable, but I really want to focus on the gold position. So how do you do that? Like, what are the best things that somebody needs to know, novice or even beginner, about buying and selling gold?
Okay, so I want to answer your question about buying and selling, also about storage, because I don't think it detracts enough from owning gold and silver. And I do want to actually focus a little bit on silver because I think it's the better buy than gold right now between the precious metals, and we want to have some both. So as far as buying and selling, buying, you want to make sure you pay the lowest premium over spot for what you're getting. So if you just look online, look up the price of gold or silver, you're going to see the spot price. It's just what, contracts are traded for large volumes of bullion. If you're going to buy a small coin at a coin shop, you're going to pay more than the spot price because that has to be, produced and, sold through a dealer. So you just want to pay the lowest amount possible. And there are plenty of companies online you can go to that they will charge you 40, 50, 60% over spot for some coin they say is special and deserves that price. And it's all a huge ripoff. And people are getting their money taken from them, and then they hate gold. And it's all just wrong. You want to pay the lowest premium over spot. I mean, really less than, 7 or 8% over spot to get a gold coin or bar that you can hold in your hand. With silver, slightly more for the production cost. But really just don't pay very much over spot, and don't buy anything that's supposedly fancy or collectible unless you're doing it the right way and talking to someone who knows what is collectible and what isn't. So buy it, hold it. As far as storage, I mean, I've got a silver coin here that's, I don't know if the camera will show it, it's from Australia. I mean, it's like, it's an ounce of silver. It's worth over $30. This is real money that won't deteriorate with inflation and won't deteriorate with time. It's always going to be there. Selling it back, Chris, is actually pretty easy. So sorry you've had a hard time with it. If you find a reputable dealer like us, like McIlvaney, we can take back any amount you have. You can ship it to us. We'll buy it back. We'll send you a check or a wire for the proceeds. So we deal in it. We're a broker. So it's very easy to do. I mean, normally you could go to any coin shop in your area, but a lot of times too, you're going to deal with a small business that maybe can't take $50,000 worth of gold very easily. So they're going to give you a lower price. They can't, move it that quickly or shell out that much cash. But, go to a reputable dealer or a large enough dealer, and someone can come to us and sell however much gold or silver they want, really. And it's no big deal. So it is a very liquid asset, believe it or not. It's as liquid as cash. You can sell it any day of the week for whatever the going price is. It's not going to sit there waiting for a buyer. And really the American market is asleep at the wheel. I mean, gold is going up like crazy. Central banks are buying it. China and India are buying it. Most of the rest of the world is on board with this. And, citizens here are just asleep at the wheel and not even realizing that their savings is getting stolen through inflation, and that they should be buying gold, and that gold has doubled in price the last few years. Like, they're just missing it. But the rest of the world is not. So it's a very liquid asset. We can always do something with it. There's a huge market for it globally. So not an issue there. And then selling it back, you want to make sure you get a good price for it and not get lowballed. But we tend to have better buyback prices. So it's possible if you work with the right place. And then also, when you mentioned storage, just doesn't detract from it. I mean, for me, I look at gold as insurance. And so part of it is I do want to be able to hold it in my hand. I do want to have it stored somewhere safe, because that's real. It's not a number on a computer screen. Like I said before, it's a real thing. So part of owning physical gold is that insurance aspect of it. That's real money that I can put my hands on, I can touch. I can't touch a Bitcoin, but I can touch a gold or silver coin. So storing it myself, if you're comfortable doing that, having it in a safe, that's one thing. If you live in a safe neighborhood, we have depositories that can store it for you. Then you're paying a fee for that, but it's like 0.5% of the value per year. So when you look at, gold went up 30% last year in 2024, you're paying 0.5% for storage. Like, it's never going to hold you back to have your gold stored somewhere and pay for that. So hold it yourself if you're comfortable with that, or store it, but at least own it. And that's your gold and silver. No one else can have that or touch that. That's your thing. And, don't do funds, don't do ETFs. You don't own physical metals. You own a piece of paper, but you don't ever actually see that gold. So if we're talking about that, 10 to 20% where it's a foundation for your portfolio, have your own gold and silver that you control, that's physical, that you can put your hands on, that's in a safe place. And it fulfills that, call it a mandate to have some insurance for your savings.
Yeah, and the other thing I think a lot of people that are listening to this may or may not know is, a lot of money sits in qualified retirement accounts, 401ks, IRAs, things of that nature. And they don't think that they have the option to buy physical gold within their IRA. But indeed, you do. You may need to move your IRA to a self-directed IRA in order to do that. But there are plenty of companies, and maybe you guys even do this, where your IRA physically can hold literally raw metals. That you can hold gold, you can hold silver, it could be in a storage facility. So a lot of times people, I think you were saying they're asleep at the wheel. I just think it's a lack of knowledge. They got money, but a lot of their money sitting in these qualified retirement plans, and they think, oh, I can't buy it. The only option I have is to buy this gold ETF or this gold mutual fund. But then they look at the past performance, they're like, this isn't something I want, or whatever the reason. So do you want to just talk a little bit about how that would work in the self-directed IRA world?
Yeah, no, I appreciate you bringing it up, because that a lot of times is the only way someone can get a percentage of exposure. They may have kids going to college, they don't have a lot of cash savings, but they've got a retirement account, maybe from an old job, or maybe they're old enough to pull out of their 401k at their current job. So those retirement funds that seemingly are locked up, if you can roll it to a self-directed IRA, we've got custodians that allow you to buy physical precious metals. So it's not ETFs, you actually are buying coins and bars. And we're talking about not just like raw gold, but investment grade minted and stamped coins and bars that are tradable as is, that are investment quality, pure bullion that you can invest in. So it's the kind of thing we can ship to you, but with an IRA. You can have a self-directed IRA, use those funds to buy that. We'll deliver it to a depository, because it has to be held by a third party. If you take the gold yourself, the IRS will say it's a taxable distribution from your IRA. So we have storage at a depository set up, the custodian that allows it, and then essentially you have your IRA funds, your retirement funds in physical precious metals that are just yours, that you own, that are in a specific depository account just for your IRA, and that's part of your savings, part of your retirement. So instead of having it in the stock market or something like that, at least having part in gold and silver, because stocks have not had a meaningful correction or crash for a long, long time. They're way overdue. Yeah. We don't want to do the buy and hold strategy now and wait through the next big drawdown in stocks. You either trade it or actively manage it, or have it hedged and have some gold and silver, which are going to go up in response as a safe haven asset. I mean, I don't know how much people know this, but buy and hold strategy, just, you've probably talked about this. I've seen you talk about it.
I talk about it all the time. It's the stupidest thing I've ever heard. And to me, coming from the Wall Street, the advisory world, the reason so many people have been taught to buy and hold is because their advisors are freaking lazy. I don't mean to call it out, but there is no other excuse. There is no reason anyone right now should have a buy and hold strategy unless maybe, gosh, I don't know. I can't see any reasons. I'm thinking maybe you were gifted a stock from your grandfather and he said, don't ever sell this. I'm going to come back from the grave. You got to hold this. It's done well by me. Maybe I'm not going there.
But the same with gold and silver. You might have a collectible coin that's, family heirloom. You want to hang on to it, but we're still going to trade it. We're still going to sell it at some point when the different strategies tell us to. So that's, But it's interesting too, with gold and silver, you can buy and hold it. I mean, it is money, it's savings. You do want to hang on to it. There's changes we're going to make along the way, reducing exposure, going between gold and silver, but it's still a buy and hold thing. But I'm glad you talk about that. And I know you put your client's best interest first, and that's great. Because buy and hold, the one thing I've looked at that really shook me was if you had stocks in the year 2000, you went through the tech bubble pop and the great financial crisis in 2008. And it was 2013 before you break even with the S&P, and 2016 before you break even with the NASDAQ. So you have 16 years there.
The drawdown effect. People don't understand the drawdown effect. They don't understand that when you lose money in the market, you have less money earning a return. So if you lose 30%, you've got to make something like 63 or 67% to get back your 30 that you lost. Just do the math, folks. That's how it works. You're working with less money. I don't care if it's on, your advisor will say, oh, it's just a paper loss. Bullshit. It's as real of a loss as it ever gets. Yes, it's on paper, but it ain't coming back, and you're going to have to work, your money's going to have to work twice as hard in some cases just to get back where you were, which is why what you said is so true. So with what we're looking at right now, or at least maybe you look at the same thing. I know you studied economics for 2 decades. So let's talk a little bit about the current state of affairs where we're at. First off, if you follow Ray Dalio and you look at economic cycles, we are at the end of a short-term debt cycle, way past the end of the short-term debt cycle. We're at the end of a long-term debt cycle, which we haven't seen for the most part, most of us in our lifetime. And the technology cycle is at an end. So you got 3 cycles, cyclical cycles, all ending. You had an inverted yield curve, which just now it's back to normal. But normal basically means we are absolutely going into a recession. It has never been wrong. It has never once happened and not led to a recession. You've got a new administration that's putting, a lot of effort into a lot of things, but it's all disruptive to the stock markets. All for the better. Okay, long run.
But we'd have to go through pain to get to a better
But we
place.
are going to go through some serious hell, some pain before we come out and see the sun on the other side. I mean, it's like, what's that movie? You remember that movie with the ship where they're like, it's that they're out there, and they had all the fish. God, it was a famous movie. It was, and then they ended up, big wave took over their ship, but they saw the light and they knew it was right there. Why can't I think?
Oh man, I like movies too, but I can't tell what you're.
It was a famous movie, but anyway, it doesn't matter. All-star cast, Mark Wahlberg and all of them were in it. But not for today. But anyway, all I'm trying to say is, we see the light, but we've got to go through the storm before we get to the light, and they know that. Trump has said that. Elon's alluded to that. Anybody that thinks things are just going to be rosy and perfect, you're wrong. If you think the Fed's going to save you, you're wrong. If you think everything's just going to continue on as it is, you are completely wrong, and you don't even know how to read any of this. But where are we right now from your standpoint in given your position?
Thanks, Chris. I think we have too much debt, and it's not fixable. There's a point where when a country has more debt than GDP, they don't really come out of that. So GDP is like what we produce, gross domestic product. If our debt is more than that, think of it like you work a job, you make $100,000 a year salary, but you have $120,000 in credit card debt. So, you make your salary, you got to pay all your expenses, you have a little bit to put towards that debt, but it's more than you make every year. Like, that's a point where it's like, something's got to change. You're not going to pay back that credit card debt. You're going to have to default. So with our country, we're more debt than GDP. That's kind of a point of no return. Now, there are ways out of that you and I don't have. They've got a money printer, so they'll just print money to keep paying back the debt. But then they're going to inflate our currency away. So that's the thing we get to look forward to, is there's too much debt to pay back. Even with Trump and Elon cutting everything, like, you can't pay back almost 40 trillion in debt if we save, a few $100 billion or even a couple trillion every year. Like, it's just not going to happen. So there's too much debt. It can't be paid back. They can keep rolling it over, but that means people have to, other countries have to keep buying our debt, which they're not wanting to. They're
definitely not going to want to after this next phase starts taking place, where there's tariffs on everything. I mean, we're going to see full on the end of globalization is near. The geopolitics are literally, the telltale signs are all there. It's over.
Yeah. So that's where gold comes in, is because that's a real, secure, liquid asset. That's something real that you own. With debt, you can either default on it and not pay it back, or you can print money and inflate our currency away so they can keep trying to pay it back. So either way, we're screwed. Either debt gets default on and our economy collapses, or they print money and we just have inflation and keep having rising prices and rising prices. Like, I don't know how they can do the CPI numbers. Like, they're really amazing wizards at making that number low, like 3% or something. I mean, I've
been following the employment numbers and how much when they go in and they revise those, like, that's hocus pocus too.
All last year, they kept revising the previous month's numbers and just hiding it. And now they're starting to come out with more real numbers. And it's like, oh man, reality is going to be a hard slap in the face when we see what unemployment really is and what inflation really is. But I mean, I was just looking at my own expenses at the end of the year, and I think my car insurance the previous year was like $1,400 a year I spent, and then now it's like $1,800 a year, and I'm like, dang, that's a decent percentage. Inflation's not 3%. What are you talking about? There's no way it's 3% when you see something like that. So, they lie to us with the stats. Inflation is way worse than it is, but that's their only option of getting out of our debt situation. So we're kind of at that sort of period where you're at the end of an empire. They've gone as far as they can go of just squandering their opportunities, squandering their wealth. Now there's too much debt. We can't pay it back. We can just print our currency out of thin air until nobody wants it anymore. So that's when you have at least some gold as a backup plan. It's going to be an asset that has value, that has liquidity when other things may not.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
Let me remind everybody, this isn't our first rodeo where we've seen this. The Roman Empire, they had gold coins. That's what they changed. Their means of exchange, how they bought things and paid for services, was gold coins. So what they did is they got into a situation like now they couldn't just create, and print more. So what they did is they clipped corners, making that gold coin smaller and smaller and smaller, and saying nothing changed. So you got the same thing happening now when they turn the printing press on, when the Fed authorizes, the Treasury to print a whole bunch of money. All you're doing is stealing dollars. You're literally, I always take, here we go. For any of you that are watching, take, here's your dollar bill, right? And every time they print money, they're doing this. Every time money gets printed, it's literally just taking a little sliver. I mean, it's not clipping corners, but it's the same thing. So as of now, if this was $1, I think after the 5.2 trillion, this is what's left. This is about what you got left for the buying power.
Take the price of gold and flip it around. We've got gold at almost $3,000 an ounce, and it was only $1,100 at the end of 2019. It's more than doubled since then. But
so why has it doubled?
But the opposite is the dollar going down. So it's not that gold changed. It's not that gold got more expensive. An ounce of gold is an ounce of gold, and there's only so much in the world. So it's not that it's inflated. It's just that our dollar is getting so bad that instead of it taking $1,000 to buy an ounce of gold, our dollar is so much more worthless. Well, I need 3,000 of your worthless dollars to give up my ounce of gold. Like that's how it's being treated. I don't want to give it up unless you give me more of those dollars, because there's so many more out there that they're printing. So the dollar's going like this, gold staying like this, the dollar's going like this.
So why do you think that's happening? Why is gold going up so much right now? What is it that, that the industry knows, or the people that are buying gold? Because it isn't, Joe Schmo, your neighbor. It's not your coworker. It's not your friends and family buying gold. It's much bigger than that. So what's happening?
Yeah, there's traders in China buying it. Central banks are buying it. So in the long term, in the big picture, it's the debt and the money printing. That's why it's going up. Those are the big reasons behind it. In the short term, when we've seen this jump from 2,000 to 3,000 in like the last year, some of that is traders in China buying it and buying contracts on their exchange. A lot of it is central banks buying it. Like central banks are buying record amounts of physical gold bullion. They're taking delivery of bars, like thousands of tons over the last number of years. They're buying gold and stocking it away as one of their reserve assets. And we're not going to see that for a long time. That's off the market. So that, and with what China's doing, it's just, there's been a lot of buying that we're not necessarily seeing here with the average person on the street buying coins. And then the tariff issue is just added to uncertainty. And that's the thing. Gold will go up when there's uncertainty. If everything's great in the world, then we don't need insurance. Let's invest in businesses. Let's do other stuff. If things are like, oh, we don't know what's going to happen. We don't know what Trump's going to do next. Is he going to slap us with a 50% tariff? Like, we don't know what's going to happen. When there's uncertainty, when there's too much debt and we don't know how it's going to play out or what the collapse is going to look like, well, that's when you buy gold. When there's uncertainty, and there's plenty of uncertainty, plenty of potential for war, plenty of potential for higher prices, collapse, debt default. It's not a situation where, the big players are looking and like, oh, everything will be fine. Let's go make some risky investments. It's like, no, let's buy some gold because that's going to be there. And let's wait and see how this all, comes undone and make sure we have something on the other side of that that's real. So yeah, uncertainty and, tariffs have added to that recently. So there's some of these pressures in the meantime. And ultimately it's just too much money is printed, too much debt. I mean, the M2 money supply, I think it was M2 I saw was like 21 trillion. I mean, $21 trillion, there's not that much gold out there. I think gold is going to go up multiple times. I think gold will go to $10,000 an ounce because it'll always account for the money supply to some extent. We've seen it do that in previous bull markets, and now we've got 21 trillion in dollars out there in different forms, like, yeah, gold is still too cheap. It's almost 3,000 and it's still too cheap. If you can believe that.
Yeah, it's interesting you mentioned the money supply, total amount of money in circulation in an economy. Now, I saw something, it was showing the hold on, let me see if I can't find this real quick. There was something it was showing that was pretty scary about the money supply. Yeah, right here. So as of 2022, the money supply has actually been going down. Now it's starting to come back up a little bit, but it was going down. And I think there was some article I read. I know I did a YouTube video on this where I talked about money supply and how it's reverting and how it's really, literally it's never done that since they've been tracking the money supply. So we had this massive ramp up in money supply in 2020, which we all know is printing. Yep. And then all of a sudden it was coming down, which is probably the Fed unwinding its balance sheet, sucking money out of central banking. And now it's starting to kind of go back up. But let me transition real quick from this, because there's another story that you hit on that we didn't really talk about. So you talked about debt, but we're hyper focusing on the United States of America and our debt here. And did you see that consumer debt's over $1.2 trillion now? Nothing to see over here, like nothing to see. Not a problem. Nope. Everybody's fine. Everybody. Yep. During Christmas, the sales were up, retail sales were up. The market's like, woohoo!
Yeah, $1 trillion in credit card debt.
On debt. Credit card debt. And with interest rates where they're at, credit card debt's like averaging 23% right now. Like, where is the end to that? Yeah. But anyway, I digress from that. But when we're talking about the US, we're talking about our massive money printing. We're talking about the delusion of the dollar because of the printing. We're talking about all these things. And the thing that really I think is important to realize is we're the best of the bunch. We're the nicest house in a shitty neighborhood. Like, you go over to India, you go to Russia, you go to any of these other countries, they're all doing China. I'm like, don't even get me started there. Like, we're one of the best going on right now. Like, Europe is collapsing, folks. Like, Euro is falling apart right now. Germany is in deep shit. And then you got China, like, I don't even know. I mean, you just don't know what's going on over there. They're communists. But, if we're one of the best from a money printing supply, then like, no wonder why India and China are just gobbling up as much gold as they can, because dude, where does all this land? Like, what does this look like in the future? Because it's not just us. Back in the day, there was, different nations and different empires battling against one another, but there was always one that was stronger than the other. It wasn't like they were all just screwed. And now the only way I can see it is they're all just screwed.
Yeah, I mean, I think it's just heading more towards global control of everything. I think there are entities and powers out there that want to keep consolidating. So we've got a European Union. I think they want a North American Union. Then I think they want a global government next. So I think it'll just be a matter of weakening certain countries like the US, getting everyone on the same playing field, and getting to the point where they have bigger and bigger unions and more control over everything. I think that's where it's going ultimately. But yeah, I mean, the dollar is just, it's the best fiat currency out there, but they're all fiat currencies. They're a piece of paper that we have to take as money because the government says so, and there's no value to it in and of itself. Whereas gold has intrinsic value for what it is, and it's limited in supply, and it's valued all over the world. But yeah, the dollar is, people get that. They see inflation. They see that the dollar is getting more and more worthless. It's just that we're the biggest economy, and we have the best fiat currency of anyone else. Like, no one's going to take the Indian currency or the Russian currency over the dollar. They're going to take the dollar, but it's still just a paper currency. And when you compare it to gold, it's lost most of its purchasing power in the last 100 years, like 99%. When you compare to when our central bank was started in 1913, and now more than 100 years later, it's basically lost 99% of its purchasing power. I mean, we had $20 an ounce gold, and now it's $3,000 an ounce gold. That's the dollar going like this, and then you get to that point where it's sort of an infinite. You can't even really go any lower. So, yeah.
Let me ask you a question on that. So, if the dollar is the almighty right now, and the Fed's number one job is to protect the dollar, which that is their only real job, and they'll go to any length, including war and destruction and everything else, to protect that dollar.
And government debt.
In government debt, yeah. But when we look at it all, like, there was talks of the BRICS nations trying to come up with a currency that would rival the dollar, but they were trying to get it gold back. Do you think that's in the cards? Do you think there's going to be an empire or a combination of empires coming together in trying to create a currency that is gold backed, like what the dollar used to be prior to Nixon?
Yeah, that's a tough one. I think there's a possibility of that. There's certainly a lot of speculation around that. I think it'll be difficult for them to do in a lot of ways, but I think there's enough desire to do that. I mean, we love America. We think it's great. The people are great, but around the world, there's a lot of places where they don't really like America. They don't like the, wars we've gotten involved in. They don't like that we export inflation to them and they have to use the dollar. So there is a strong enough desire to get away from the dollar that they're certainly trying to. It's interesting. I mean, you can find websites and podcasts where they're like, oh yeah, BRICS are going to take down the dollar. And I'm like, I don't know. I mean,
not right now.
We still have the deepest capital markets and the biggest debt markets, the biggest economy. So the dollar's still going to be around. We're still going to use it. Is it going to lose purchasing power? Yeah. Is Trump going to disrupt things with tariffs? Is there going to be pain to go through? Yeah, probably. But I think there is, from what I've seen, definitely a desire for there to be some sort of competing reserve currency. And with the BRICS nations, I mean, they're all nations that wouldn't really get along great otherwise, except for their, mutual hatred of the U.S. and the dollar. So they, if they can get around their differences, and there has been a good amount of progress on that. Like, I don't want to downplay it too much. Like, there are bilateral trade agreements where they're, certain of these BRICS countries, they're trading between each other and settling in their own currencies and not using the dollar. So, I mean, that's a big deal for us. Our dollar is strong because everyone around the world uses it. There's a lot of demand for it. And the more and more countries that are getting away from doing that, the more inflation we're going to have. We already have enough money printing, but, since so many of those dollars are used around the world, that helps. But the more they get away from that, then those dollars come back here, hello, even more inflation from all that extra money that's already been printed now, not being used around the world, now coming back here, now sloshing around here, then you have $5,000 gold. So, the more they're doing that, I think the BRICS nations, I think China definitely do represent a threat to dollar dominance. It's just a matter of how soon that takes place and to what extent. Maybe there's a competing reserve currency. Maybe there's multiple options. So I don't know if the dollar can go away, but I'm not going to save in dollars. I'm going to save in real assets. So whether it's real estate or gold and silver, I'm still going to save in something real, because we're heading into that kind of part of the cycle where you get away from financial assets and you go into commodities and tangible assets. That's just where we are in history, essentially.
Absolutely. I've been ringing the bell, slapping people around, trying to tell them, like, listen, like, these stocks, like, God, people are so emotionally attached. I mean, the FOMO is so real right now with stocks like NVIDIA, even after DeepSeek, they're like, it's the almighty, it's going to go up. I mean, it's just unbelievable what I hear. It makes me sick, but it also makes me realize there's a much deeper rooted problem. And that is, we've been in the longest bull run in history. I truly believe this generation coming up, they've never seen it, but they've never felt the impact of a recession, because the Great Recession was too long ago, and you can't really call the pandemic a recession. It didn't actually hold long enough, but they don't know a downside. And because they don't know a downside, that fear isn't there like it would be for, someone like myself that's gone through multiple recessions as a business owner and as an advisor, and watched how terrible it really is, and knowing that we're going to be in one probably in a relatively short amount of time here. And the only thing you should be doing is getting prepared, like talking to Michael here and, his company, and getting loaded up on 10 to 15% in actual metals. But on that topic, why silver? That's interesting. Why silver over gold? Let's hit that one real quick.
Yeah, that's a fun one. So I like both. I like gold and silver. I have gold. I like silver because it's more undervalued, and I think it's going to make a big catch-up move and actually outperform gold percentage-wise. I think we're going to get more growth and profit out of our silver from these levels. So silver is an interesting metal. It's a precious metal like gold. It's that tangible store of value. It's also an industrial metal. Really, half of the demand for it is investment, half is industrial use, because silver is the best conductor of electricity. Nothing else beats it. And so what's interesting is there's no substitute for it. We have to use silver in solar panels and electronics and all this stuff. You know what happens to that silver, Chris? You know where it goes?
No idea.
Disappears. We don't have it anymore. I mean, it's basically consumed.
I thought it was a trick question. I'm like, I don't know where it goes. It's not here anymore.
Kind of a trick question. Yeah, essentially that silver gets consumed. It's gone. Like, it is not worth digging through the dump and pulling every little soldering drop out of every TV and every cell phone to get it back. It's not worth the time to do that. So that silver's gone. So every ounce of gold that's ever been mined is sitting somewhere all throughout human history, going back to Egypt and everything we've mined now. It is sitting somewhere in some vault. It is being hoarded. Silver, most of it has been used up in industrial applications, and there's not really a lot of it to go around. So I think there's a supply shortage there that's going to drive the price up at some point. There's a lot of demand already. It's a small market. There's not that much to go around. And the thing with silver, it's more volatile than gold. It has bigger price swings. They tend to go in the same direction. So when you see gold going up like this the last 20 years, silver's going up too. It's going like this and making these big up and down moves, but following the same trajectory as gold. It's more volatile because of the different supply and demand dynamics. So we try to use that to our advantage. The relationship between gold and silver fluctuates over time. Sometimes silver outperforms gold. Sometimes gold outperforms silver. So when we're on the right side of that, it's an arbitrage trade. And I'm hoping your listeners are pretty savvy, with what you talk about on the show. We can trade one for the other at different times and get free ounces. We're arbitraging that difference between gold and silver. Sometimes it takes 100 ounces of silver to buy an ounce of gold because the price is so low for silver compared to gold. And then sometimes silver runs and catches up. Sometimes it only takes 40 or 30 ounces of silver to buy an ounce of gold because silver has jumped up so much compared to gold. So we're looking at where are we at in this cycle and where's it going next? Do we need more gold or more silver in our precious metals position? And I'll have both. I want to be balanced, but maybe lean a little more towards one or the other based on that relationship. And then when one of those metals outperforms the other for a time, then let's take some of it, trade it for the other, and get free ounces of the other one with that extra performance. So silver is key for that because it's more volatile and will make these bigger moves. And where we're at right now is it is undervalued. It hasn't kept up with gold, and I think it'll make a big pop and a big catch-up move. We saw in 2008 to 2011, silver outperformed. We saw right after COVID, silver outperformed briefly. It'll have these long, boring periods and then this big spike and catch up. So we want to make sure we're in on those. And here's the easy part to look at that. Gold is at all-time highs. It's never been this high before nominally. It's setting record prices. Silver's previous high is $50 an ounce, and it's at 32. So it still needs to, you could say, double in price to set a new high and go well beyond it like gold has. I mean, gold's previous high was 2,000. Now it's almost 3,000. So let's say silver sets a new high and goes well beyond it. It's got to double in price to do that. And looking at history, we've never really seen it not do that. We've never seen it not catch up to gold and do the same thing that gold does. So the risky bet would be to say, we don't need silver. It's not going to do anything, because that's never happened. What's going to happen at some point is it's going to make a big pop. There's going to be some supply and demand crunch. Silver's going to go through the roof. It's going to catch up and do the same thing, or extra investment demand. Again, there's not that much silver to go around. So even just a little bit more investment demand can make the price jump like that because supply gets eaten up real quick. So I think we're going to see that catch-up move. I think we're going to see silver outperform percentage-wise in the next couple of years and sort of be the next big mover compared to gold. And then we'll adjust our allocation, maybe from heavier silver to heavier gold, get some free ounces and reset for the next go-around. So, yeah. So
let me ask you a question. McIlvaney, if I went to McIlvaney today, if spot's 32.14 on silver, how much could I buy it from McIlvaney?
Just getting basic rounds or bars, we're usually about $2.50 over spot. So
about
call
34.
it, spot's 32, maybe 34.50. And, larger bars, probably like $2 over spot. So we're going to be as low as like a coin shop where you're just paying a little bit, and sometimes even less. Like the big discount websites out there, I won't name, or even a coin shop, sometimes we're even a little bit less. They might be $3 or $4 over spot. So it's going to be as cheap as you can get it, and you get the added value of a personal advisor like myself telling you when to make changes, telling you how to set up the right way initially, helping you through the process of either an IRA or storage or whatever it is. So, reach out to me and I'll help you one-on-one navigate this and, really set up the right amount and do it the right way for whatever your personal portfolio is and tailor it to your needs.
Well, how would everybody get a hold of you?
Well, again, fill out the form on my website. So McAlvany.com/Michael. If you see the video, it's McAlvany, McAlvany.com/Michael. Or you can call, you can put this in the notes. You can call me directly at 970-459-4611. 970-459-4611. Call or text me or go on that website, fill out a form with your contact info, and I'll get in touch. And usually I'll spend time with clients, get to know them, and figure out the best way for them to invest in precious metals and how to do it.
Love it. We're going to put that in the show notes here. Back to the 34.50 or wherever it is with the, a couple of points over spot. That you do that, but then you got shipping cost if you wanted to take possession of that, correct?
Mm-hmm. Yeah, I mean, that's really not a big deal. Like if you have a small amount, it might be $15 for shipping just to cover the cost of insurance. If it's, say someone wants $1,000 worth of silver. If someone is getting, a few thousand or more, or if someone wants $10,000 worth of gold or silver, we're going to ship it for free. So usually shipping cost is not a detractor. If it's storage, there's not going to be shipping costs. So yeah, you're paying a little bit over spot for the bullion.
And that's what I was trying to get at. Yeah. Okay. So if you buy more, shipping's included. And if you keep it in storage, there's no shipping cost. So that kind of, what I was trying to get to is that kind of offsets that 0.5% storage, at least for the first year, maybe a little bit. That's kind of where I was going with that. Now I got to go back over to one other thing, because I don't know this. I'm not the expert, but if the M2 money supply, in each unit in the M2 money supply is measured in billions of dollars. Okay. I want to basically let you know that. So as of December 2024, it was 21,533.8. So if that's the money supply today, how much gold is there in existence that we know of?
That's a good question.
Is there even enough gold to back the money?
That's the real question. So so you're talking about 21,000 units in billion. So it's 21 trillion money supply.
21 trillion. Mm-hmm.
As far as the amount of gold out there, that's the interesting question, because it's hard to really see what all is out there. China has a lot. Because when you really think
big picture in a perfect world, if we were all going to go back to the the gold standard of backing dollars with actual physical something of substance, like I don't even think there's enough gold, or maybe even gold and silver, to support the money supply in existence.
Well, and here's the key. It doesn't matter how much gold there is. It matters what price it is. Well, so that's the key.
Exactly where I was going with that.
That's the key. So there is enough gold, but at these prices, it's not going to work. At much higher prices, it could work for at least a partial back. I doubt we'll have a gold gold-backed currency again. The banks like to, loan out more than they have. It's just I mean, they'll assassinate presidents before they go on a gold standard, in my opinion. That's what I think. But if we had to do a partial gold backing to boost confidence in our currency, or compete with China if they try to do the same thing, because they might have more gold than we do. They're just not admitting to it yet. But when you track stuff, they probably have more gold than the U.S. does, and we may find out the truth someday. So if we had to do something like that, it might be a partial backing. But yeah, I mean, just looking at the 21 trillion, looking at the 40 trillion in debt, if you look at the over 100 trillion of unfunded liabilities we have with Social Security and Medicare and whatever, I mean, the numbers go crazy. So even if it's just the 20 trillion, I don't know. I mean, you might have to have $20,000 an ounce gold to do, let's say they do a partial backing, a 30 or 40% backing or something. It would be crazy numbers. Let's just say there's not that much gold out there compared to the dollars. And most of it, I mean, China has a bunch, India has a bunch, central banks have a bunch. We're not seeing that. That's not accessible. So for the amount of gold that maybe is accessible that countries have, or that we may or may not have, here's the other thing, Chris, too. When Fort Knox was last audited?
I didn't know it was audited ever. Just kind of like the Pentagon. I mean, they've never passed an audit. So I mean, why would you audit Fort Knox?
Well, it's because we don't know what's there. It has been audited, but it's been like 70 years. I'll have to look. It's been between 60 and 70 years. So we don't know what's there or who owns it. Either there's gold there and maybe France or someone else owns it because we've leased it to them, or it's been shipped out and it's not there. But the fact is, we don't know what is there or what we have. So, is there enough gold to back our currency to some extent if we needed to boost confidence? Yeah, at much higher prices. But where is it? Who has it? I don't know. That's an interesting question. We're supposedly sitting on 8,000 tons of gold. Hopefully we still own it and it's sitting there and someone else doesn't own it. Hopefully we don't have to go get it. Just like London right now, all the futures contracts on the commodities market, they're taking delivery of the gold rather than settling in cash. So that's all going to New York. And now London's having to scramble to get more gold, and they're not the, main hub for gold anymore. And, what's going to happen if we had to do something to
like actually deliver the gold to the recipients? I'd have to believe there might just be a problem. I mean, there was before. That's exactly why these other things have happened throughout history. Like we literally didn't have it. So who knows? Yeah. Who knows? They're all interesting questions. And I was just staring at that M2 chart, and I'm just like, is there even enough gold? But you know what we've got, Michael? You know what
buy it now, because at higher prices there is enough gold. So buy it now.
But we've got one thing no other country has, and I'm gonna let you know what that is. It is Elon Musk. So he's gonna send his rocket up. He's gonna grab one of those meteorites that's mostly made of gold, and he's gonna bring that sucker home. I just watched that in my daughter's show, Paw Patrol. They almost had that thing. I'm totally messing.
I'm like, did they really do that storyline? I would believe it. I'd be like, oh, now it's like the Simpsons.
I wouldn't
They're predicting
put it past
things.
Elon. I wouldn't. But I mean, we're not there yet. I just thought I'd upset the flow here a little bit.
No, I mean, there's supposedly a big store under the Vatican, and if we had all that gold, everyone would have a bunch of gold, and it's like, no. There's not that much out there. There's really not. It's super scarce. That's why it's money. That's why it's valuable, is because it's scarce. The more dollars we print, it's not scarce. It's not valuable. The less houses there are to buy, the more prices go up. If it's scarce, it's valuable. And gold and silver especially are the most scarce thing on the planet as far as something that's valuable as money, something that's a store of wealth. Nothing else makes any sense.
So on that exact pretense, final question for you. Seeing as though we are staring down the barrel of a recession, and I will tell you, we got about 100% chance of being in a recession. I know a lot of people will argue that, but that's where we have. So let's say we do go into a recession and we're there for a year, 2 years. Where does the price of gold go? In your opinion, I know you can't speculate. I know you can't predict the future, but where do you think gold is in 2 years if we enter a deep recession?
2 years is maybe somewhat of a short time horizon to make a prediction, and I don't like to make predictions. But
I know I'm asking it as the final question.
where I see gold going, honestly, is at least $8,000 an ounce. Because when we look at the bull market from the 1970s, it made an eightfold move from the low to the high. And in the early 2000s, we also saw an eightfold move from the low to the high. And if history repeats, and there's every reason to think that it will, and everything's shaping up the same way, we had a low of around 1,100 or just below in 2016. And now it's starting this new bull market. So it's like, all right, are we going to have another eightfold move? Probably going to go to at least 8,000. And I think the situation is so much worse today, and we've printed more money today, that it would probably overshoot the relative, matching of what those previous bull markets have done. I imagine it'll overshoot. So I would almost say gold's got to go to at least 8,000. And then if you look at silver, the price ratio, gosh, it's 90-1 right now. It takes 90 ounces of silver to buy an ounce of gold. You want to take a guess at how low it gets at the end of a bull market when gold has run up?
Yeah. Interesting. Yeah. 30-14. That's
how low do you think the ratio could go? Well, I'll just tell you. So at the end of the bull market in 1980, it got down to 17-1. We're talking about 90-1 right now, going down to 17-1. So let's say gold goes to 8,000 and it only takes 17 ounces of silver to buy an ounce of gold. So what is that? Sometimes I'll just do 20-1 because that makes it easier. $400 silver. Can you imagine? It's $30 an ounce. Can you imagine $400 an ounce?
You're saying now might be a good time to get some silver. Just saying, not making investment advice here, but it just might be a decent time to look at silver. All right, McIlvaney.com/Michael. If you want to give him a call or shoot him a text, it's 970-459-4611. We'll put the website up in the description, but you're not going to get the phone number. So hopefully you wrote that down. Michael, this has been awesome. Thanks so much for coming on the show and educating us all, myself included, on precious metals and just where we're headed, because I think you are spot on.
Yeah. Well, thanks for having me, Chris. Yeah, well, I appreciate it. I love your show, and thanks for having me on. It was fun, so appreciate it.
My pleasure. All right, folks, go out there. It's time to say, I love gold, the look of it. And, well, throw me a freaking bone. With that being said, thanks for joining us for Money School Podcast. Get yourself loaded up with some gold and silver, specifically maybe the silver, and do that through Michael, and he'll be your advisor. Thanks, folks. We'll see you on the next one.